What if everything you know about money is an illusion? It's not a mistake, not a misunderstanding, but a carefully engineered illusion created by the world's most powerful institutions, central banks. Because the real mystery isn't how money works, but how central banks designed a system so subtle, so all-encompassing, that every citizen, every business, every government is trapped inside it without ever realizing it. A system where money can be created from nothing, where debt becomes prosperity, and where inflation quietly siphons wealth from millions without a single vote cast. Today we're exposing how the illusion was built, and why escaping it may no longer be possible. To understand the illusion, we must go back to the moment when money stopped being a thing and became an idea. For centuries, money meant gold, silver, and physical wealth. Kings couldn't create more wealth unless they conquered new land or mined new metal. Expansion had limits. Governments had boundaries. But in the 1600s and 1700s, powerful banking families in Amsterdam and London discovered something revolutionary and dangerous. People trusted paper if it represented gold. And once trust was established, paper could represent anything. This was the birth of fractional banking, the seed of the illusion. Then, in 1694, the Bank of England became the prototype for the world's future, a central bank designed not to protect citizens, but to stabilize governments and their debts. The stage was set for a new kind of power, one that operated above nations, above politics, and above ordinary people. In the 1800s and early 1900s, countries across Europe and North America copied the model. They created central banks that could manipulate interest rates, issue national currency, finance war without raising taxes, and control lending across the entire economy. The illusion took its first full form. Money no longer measured wealth, it managed society. In 1913, after secret meetings on Jekyll Island, the U.S. created the Federal Reserve. It was sold as a safeguard against banking crises. It quickly became the engine of modern debt. The Fed had a superpower no bank ever had before, the ability to create money at will. Every crisis, every war, every recession would push the Fed to print more, and every solution made the illusion stronger. The illusion shattered and solidified on the same day. In 1971, President Richard Nixon ended the dollar's convertibility to gold. Money detached from physical reality forever. There was no anchor, no limit, no stopping point. From that moment on, money equals trust, trust equals policy. Policy equals power, and central banks became the architects of the entire global financial system. Without gold, governments discovered an addictive trick. If the economy slowed, print more. If markets faltered, print more. If debt rose, even more. This wasn't a bandage, it was a transformation. Money creation became the first response to every crisis. Between 2008 and 2022, the U.S. alone printed more than 80% of all dollars ever created. Stocks soared. Real estate exploded. Wages didn't. The illusion made some people rich, but it came with consequences. The more central banks print, the more prices rise. But instead of admitting the cause, they blame supply chains or corporations or unexpected events. Meanwhile, home prices outpace incomes. Savings lose value every year, currencies decline silently, and debt becomes the only path to survival. The illusion now feeds itself, and the world is stuck inside it. Today, nearly every major economy faces the same reality. Japan's central bank owns half its government bond market. The EU is trapped in negative interest rate experiments. The U.S. national debt has passed $37 trillion. Global debt has reached $300 trillion. Inflation erodes purchasing power worldwide. The pattern is unmistakable. Every time central banks intervene to stabilize markets, they make the system more fragile. Every rescue plants the seed of the next crisis. And every nation keeps pretending the illusion can last forever. Central banks don't respond to the economy, they shape it. Their policies control money, debt, and wealth. The illusion works because people trust the system, not because it's stable. Every dollar is created through debt, meaning the system requires endless borrowing to survive. The illusion can continue for years, even decades. But no system built on infinite debt can expand forever. And when trust cracks even slightly, the illusion breaks instantly. Every major empire fell not when money ran out, but when belief did. If you want more deep dives into global finance, monetary history, and the hidden mechanics behind crises, make sure to like, subscribe, and turn on notifications. So understanding the illusion is the first step. The next step is learning how to survive when it finally collapses.